The modern cash advance landscape has evolved significantly, moving beyond traditional payday loans to include digital platforms and mobile applications. These services have become increasingly popular among working professionals who need quick access to their earned wages before payday, offering more competitive rates and flexible terms than conventional payday lenders. The current market includes both established financial institutions and innovative fintech companies, each providing unique features and benefits to meet diverse consumer needs. Banks, credit unions, and fintech companies are now competing to offer the most attractive cash advance solutions, driving down costs and improving service quality. This competition has led to the development of sophisticated algorithms that assess borrower risk using alternative data points, moving beyond traditional credit scores. The result is a more inclusive system that can serve a broader range of consumers while maintaining responsible lending practices. The rise of digital cash advances has also brought increased regulatory scrutiny and consumer protections. Modern platforms must comply with strict guidelines regarding interest rates, fee transparency, and lending practices. This regulatory framework has helped legitimize the industry and protect consumers from predatory lending, making cash advances a more viable option for emergency funding. Direct deposit advances represent the newest evolution in cash advance services, where providers connect directly to your bank account and payroll system. These services typically offer advances based on your earned wages, with repayment automatically deducted from your next paycheck. The key advantage is lower fees compared to traditional cash advances, often charging flat monthly subscription fees instead of interest rates. Credit card cash advances remain a popular option for immediate access to funds, though they typically come with higher interest rates and additional fees. The benefit of credit card advances lies in their immediate availability and the established relationship with your credit card issuer. However, interest begins accruing immediately, and there's usually no grace period, making this option more expensive in the long run. Mobile-first cash advance apps have emerged as a significant player in the market, offering features like early wage access, budgeting tools, and financial education resources. These apps typically use a membership model with transparent fee structures and often include additional benefits like overdraft protection and bill payment services. Their user-friendly interfaces and quick approval processes make them particularly attractive to younger consumers. Most modern cash advance providers focus on employment verification and income stability rather than traditional credit scores. The primary requirements typically include regular direct deposits, a minimum monthly income threshold, and an active checking account history. This approach makes cash advances more accessible to individuals with limited or imperfect credit histories. Verification processes have become streamlined through technology, with many providers using automated systems to confirm employment and income. Advanced platforms can now verify income and employment instantly by connecting to payroll systems or analyzing bank statements. This automation has significantly reduced approval times while maintaining security and accuracy in the verification process. Documentation requirements vary by provider, but generally include proof of identity, recent bank statements, and employment verification. Some services may require additional information, such as pay stubs or tax returns for higher advance amounts. The trend is moving toward minimal documentation requirements for smaller advances, with more stringent requirements for larger amounts. The true cost of cash advances varies significantly between providers and service types. Traditional cash advances often charge percentage-based fees ranging from 2% to 5% of the advance amount, plus daily interest charges. Modern fintech platforms typically offer more competitive pricing with subscription-based models ranging from $5 to $10 monthly, plus optional express transfer fees. Hidden fees can significantly impact the total cost of a cash advance, including transfer fees, late payment penalties, and membership charges. It's crucial to understand the complete fee structure before accepting an advance. Some providers charge additional fees for instant transfers or early repayment, while others may increase fees based on advance frequency or amount. Annual percentage rates, APRs, for cash advances can vary dramatically, from as low as 36% for some fintech platforms to over 400% for traditional payday lenders. Modern providers are increasingly moving away from interest-based models to flat fee structures, making it easier for consumers to understand and compare costs. This transparency has become a key differentiator in the market. Repayment structures have evolved to offer more flexibility than traditional lump sum payments. Most modern providers allow for automatic repayment on your next payday, while some offer installment options for larger advances. The trend is moving toward customizable repayment schedules that align with borrowers' pay cycles and financial situations. Extension and rollover policies vary significantly between providers, with some offering grace periods or payment plans for users who cannot repay on time. However, these options often come with additional fees or restrictions. Modern providers are increasingly incorporating flexibility features that allow users to adjust repayment dates without penalties, provided they meet certain criteria. Early repayment options have become more common, with many providers encouraging early repayment by eliminating or reducing fees. Some services offer incentives for early repayment, such as increased advance limits or reduced fees on future advances. This approach helps users build positive financial habits while reducing the provider's risk. Most cash advance providers do not report to major credit bureaus, meaning these advances typically don't affect your credit score directly. However, some newer platforms offer optional credit reporting for users who consistently repay on time, helping them build credit history. The key is understanding which providers report to credit bureaus and under what circumstances. Late payments or defaults can indirectly impact your credit score if the provider sends the debt to collections. Modern providers typically work with users to prevent defaults through payment plans and grace periods. Some platforms even offer credit building features that report positive payment history to credit bureaus while not reporting negative information. Alternative credit scoring models are emerging that consider cash advance repayment history alongside traditional credit factors. Some fintech providers use their own proprietary scoring systems that take into account factors like income stability and repayment history. This can benefit users who maintain good standing with these services, potentially leading to increased advance limits and better terms. Modern cash advance platforms employ bank-level security measures to protect user data and financial information. This includes encryption protocols, multi-factor authentication, and regular security audits. Leading providers typically use secure API connections to access bank account information without storing sensitive data directly. Data sharing policies vary between providers, with some selling anonymized data to third parties, while others maintain strict privacy standards. It's essential to review the privacy policy and data sharing agreements before using any cash advance service. Many modern providers offer granular privacy controls that allow users to manage their data sharing preferences. Fraud prevention measures have become increasingly sophisticated, with providers using artificial intelligence and machine learning to detect suspicious activities. These systems monitor transaction patterns, device information, and user behavior to prevent unauthorized access and identity theft. Regular security updates and user verification procedures help maintain the integrity of these platforms. Quality customer support has become a key differentiator in the cash advance market, with leading providers offering 24/7 assistance through multiple channels. This includes phone support, email, chat, and in-app messaging options. The best providers maintain quick response times and offer comprehensive self-service resources for common issues. Dispute resolution processes have been standardized across many platforms, with clear procedures for handling payment disputes and account issues. Modern providers typically offer transparent escalation paths and document resolution timeframes. Some services provide dedicated support teams for premium members or higher advance amounts. Educational resources and financial tools have become standard offerings, with many providers offering budgeting assistance, financial planning guides, and credit education materials. These resources help users make informed decisions about cash advances and improve their overall financial health. Some platforms even offer personalized financial coaching or automated savings features. App stability and system uptime are crucial factors in choosing a cash advance provider, as users often need immediate access to funds. Leading platforms maintain robust infrastructure with redundant systems and regular maintenance schedules. Performance metrics like transaction processing times and system availability are typically published for transparency. Transfer speed capabilities vary between providers, with some offering instant transfers for additional fees, while others process advances within 1 to 3 business days. The most reliable platforms maintain consistent processing times and clear communication about transfer status. Some providers partner with multiple banks to ensure reliable fund delivery even during high-volume periods. Technical support infrastructure includes automated monitoring systems and dedicated engineering teams to address platform issues quickly. Regular platform updates incorporate user feedback and new features while maintaining system stability. The best providers maintain clear communication channels for system status updates and plan maintenance. Comparing different cash advance options requires careful consideration of fees, terms, and provider reliability. Focus on total cost of borrowing, repayment flexibility, and platform security when evaluating options. Consider factors like transfer speed, customer support quality, and additional features that may add value beyond the basic advanced service. Reading user reviews and experiences can provide valuable insights into provider reliability and customer service quality. Pay attention to patterns in user feedback rather than isolated incidents. Professional reviews from financial websites can offer objective comparisons of different platforms and their features. Long-term financial planning should include strategies to reduce reliance on cash advances. While these services can provide valuable short-term relief, developing emergency savings and improving financial management skills are important goals. Consider providers that offer tools and resources to help achieve these longer-term objectives.